All right, everyone, here we are with ticker symbol NOKIA. And before we jump into this chart, I want to say to all my first-time viewers and investors, welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. And let's jump into this chart. So Nokia had a dramatic fall. It hit lows here of about 322. This is still an important number because if it breaks through that, this could be on its way to newer lows. But the bulls have tried to reappear, and there is a slight momentum here, but they were not able to break too far away from resistance. They're kind of just hanging out around it right now at 338, and resistance was 337, so it's only a cent difference, and our new resistance is not that much further away from where we're at right now. And then let's go ahead and move this. So this is a very narrow stretch. Still keep in mind that 322 mark, super important down here, but let's go ahead and look at this based off of what happened Friday and how we're going to look at this for Monday. So the 50-day moving average is 346. As long as we're below it, the bears are in control. The moment we're above it, the bulls are in control. We're currently at 338, and for the bulls to get closer to it and break through it, they need to break through 340, turn that into a support, start to hit newer highs and new resistance levels. So super important for the bulls to do that, and they need to go ahead and break away from this resistance level and get closer to the 50-day moving average, cross it, and start to hit newer highs to get deeper into bullish territory. But before they get there, the first step is breaking through 340, turning that into a support, and starting to hit new highs. On the other hand, we have our support level. The support level is important because if it gets broken through, this is getting closer to the lowest point of 322, and that is 332. Another thing too, we're already in bearish territory, so if this breaks through support, the bears are gaining more control, pulling this further away from the 50-day moving average in a downward direction, and super important to keep in mind. So if 332 is broken through, pay very close attention to the behavior of this stock. How quickly is it hitting newer lows, or are the bulls trying to reappear and bring this back up? Because this is still pretty close to the 50-day moving average, giving a chance for the bulls to actually reappear and get back into bullish territory. So the tug of war is going to be interesting on Monday and this coming week, but pay very close attention to these points of reference. This right here does not signify that the bulls have gained control, breaking through 340. And not only does the 50-day moving average state that they've gotten back into bullish territory and they have control, no, they need to pull away from it significantly to start creating that momentum and catalyst to pull away from it and hit newer highs to start gaining control over the chart. But this is just the beginning of that momentum and that rally. So 340 is just an indicator to let us know that it's getting closer to the 50-day moving average and that the bulls are getting closer to getting back into bullish territory. And this right here, I just want to emphasize to all investors, pay close attention to this support because we're already in bearish territory, and breaking through the support is just pulling us further down, further away from the 50-day moving average in a downward direction. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell. By clicking on the bell, you turn on all notifications and you won't miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.